Greetings, it's Dr. Jeffrey Scott, and this is a special edition of my Markets in Minutes entitled Heed the Hindi, or in longhand, the Hindenburg Omen. I am doing this just after midnight in the morning of the 13th, and I think it's interesting that I'm doing this the day we're going to get the CPI, and then the day after following day, we're going to get the PPI. I think there's more danger in the market than the indexes are telling us, and I just wanted to go back and talk about something that I think is meaningful before you put all your hard-earned money at risk. This is for educational purpose only. Only anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. I really love wealth charts, and you'll see me doing every weekend a long video using wealth charts of how I use it and how I trade with it. It's a great program. But I use other programs too. Wealth Charts doesn't have the breadth tools that I need for this session, so I'm going to bounce among different platforms. Trading involves risk, and you alone are solely responsible for any investment decisions you make. There is, speaking of wealth charts, the Wealth 365 event is coming up October 9th through the 14th. I'll put this link below the video in the remarks section. Love to have you join. It's free online, and you'll have more than 50 different speakers and opportunities to buy some great tools at a low price. I also put a regular video out every day at stocksanddocs.com. When I travel, it's not every day, but if I'm not traveling, I try and get something up. I just did one for tomorrow. These white slides with the three emblems here are paying homage to the person that made a huge difference in my life. There have been many great influences, John Person, Rob Hoffman, among others, but Ian Woodward really was the one that got me to stop wasting money and throwing it away and really taught me how to have a plan. And he was a person who was CanSlim trained and made it his own version. This is a slide that goes back to his days in England. It's called Snakes and Ladders. And the point of this is if you're playing with we had Chutes and Ladders in the US. You roll the dice, you're moving up, and you come up to 28. Awesome. You take the ladder right up to 84. You think you're going to win. You roll the dice again, and you end up on 87, and you're back to 24. Don't play Chutes and Ladders or Snakes and Ladders with your retirement money. You have to have an edge, and I think tonight what I'm giving you may help you with an edge. Let me introduce you to something that Ian taught us 20 years ago or more, something that has saved my bacon more than once. It's called the Hindenburg Omen. It's a strong warning signal for a market top. It occurs when the herd, that's us amateurs, are buying while the pros are selling. Its claim to fame is there has never been a significant stock market decline in history that was not preceded by a confirmed Hindenburg Omen. However, 75% of the signals are mainly small corrections. So keep in mind, I'm not saying we're going to have another bear, but I am expecting some further weakness. We should not see this often. This is a traditional definition, 5 criteria. The daily number of NYSE new 52-week highs and daily number of 52-week lows must both be greater than 2.2%. Smaller numbers greater than 79. The NYSE 10-week moving average is rising. The McClellan oscillator is negative on the same day, so rising moving average, negative McClellan. And the 52-week highs cannot be more than twice the 52-week lows. This is mandatory. A confirmed Hindenburg Omen occurs if a second or more Hindenburg Omen signals triggers during a 36-day period from the first signal. Now, this line number one is the problem we have with a number of different products in the market. As I was taught, it's the common stocks in the NYSE. It's not all the bond funds and other preferred instruments. So you have to get a data set that restricts or eliminates those. Now, this is dated, but I'll show you each of the big Hindenburg omens since 2005. But going back to 2005, 25% have been significant, and you could see that all of them had pullbacks, and the big mother was, up until perhaps early recent days, 38.2% in 1987, 34% in 2000, 25% 2001. So if we look at, sorry, this thing's so touchy tonight. Let me just try this again. If we look at what happened in 2006, 2007, and early in the year in 2006, each one of these lines, and these are a bunch of lines, was a Hindenburg Omen signal. Notice it doesn't drop right away, but it ultimately had an 11% drop. Okay, this was a spurious signal that was not confirmed. And then as we got to the end of 2007, we had a 14% drop by the confirmed Hindenburg omens. This was that 14% drop. And then we rallied back up to new highs. And then in late 2007, we got the signal again. And I think the rest is history. You know what happened in 2008. Well, what about COVID? Notice the Hindenburg Omen signals fired in a strong uptrend in December of 2019. And then, starting in January until mid-February, they kept on firing. Now, I can guess, the Hindenburg is up here, these red lines. I can predict that we were already talking, or remember, about COVID up here, but we weren't talking about it in 2019. And what had happened? Look at the massive drop in the market. So the Hindenburg Omen has been impactful even after 2005. So late breaking news, we have confirmed Hindis on multiple platforms using different data sources. They include TradeStation, HGSI, EdgeRater, and the Q market breadth on Metastock. What I'd like to do now is just look at these very quickly. So let me end the slideshow. This is HGSI. For those of you that own HGSI and don't see what I'm going to show you, which is going to be, I had to go back from 20. Here are the confirmed Hindis. Here was a Hindenburg Omen that occurred a little bit over 30 days ago, but these are confirmed. This one's spurious. These are confirmed. Notice how many Hindenburgs we saw in the NYSE going back. We didn't. We saw a lot of Hindis on the NASDAQ, which is not traditional. But this is on the NYSE. And again, for those of you using HTSI, I have two Hindis plotted, one using the All NYSE index, and the other one is using the bar chart market indices. So here we are in HTSI, confirmed Hindenburg Omen. This is the Q market breadth tool from Sagar Nandi, superiorprofit.co. Awesome product. Unfortunately, you have to run this in Metastock. Sagar likes Metastock because he trades Indian stocks and he lives overseas. It's an extra data feed that you'd have to get to repeat this. What I wanted to show you is that we now have on the NYSE, we have confirmed Hindis. Here was the first one on the 8th. Here is the 11th. Remember, you got 36 days. And here is the 12th. He has a rolled up market breadth total view, also with a confirmed Hindi. Okay, let's kill that one. Here is EdgeRater. I mentioned over the weekend that I was surprised to see a Hindenburg Omen fire on Friday. It was going to make me pay attention, but it wasn't going to make me change much because it wasn't confirmed. Well, we had firing again on Monday or Tuesday, and if you're trying to repeat this at home, I am using the NYSE Common Index. And then lastly, I built a Hindenburg Omen indicator inside of TradeStation, and you could see it fired today as well. It fired back here, it fired today. Now, if I go back to the end of 22, am I going to see it? Actually, it's the end of 21 going into 22, my bad. This was the prior market high. Notice on the NASDAQ, the Hindenburg Omen. Now, traditionally, we don't look at the NASDAQ for a Hindi, so you don't have to put bad remarks in on my video that this is wrong. I know it's not traditional, but the NASDAQ reflects more of what I trade, technology stocks. So why isn't it meaningful? And you could see what happened. If you had known about this in December of 2022, you might have made it a little bit less of a problem as December 21 rather, as we went into the bear market of 2022. So there you have it, four different platforms, each showing the Hindenburg Omen with a little bit of background. When I looked at the markets on Friday, excuse me, I gotta keep my days straight. On Tuesday, the spiders closed below their 50, right on trend line support. We're in a bit of a wedge there. The Qs and all these were down is right above the 50. The diamond failed at the 50. The Russell struggling above support. The VIX, interestingly, did not do much. UVXI was relatively flat on the session. The dollar was up a bit, even though it was a red candle. It was up 0.17%. On the commodity side, we can see gold and silver, although they have green candles, they're both down on the session after gaps. Oil is like the Easter Bunny, continues to go higher. And now the 10-year has now run up into an auto-generated trend line resistance. So it'll be interesting to see what happens. Here is the 30-year. They were both down on the session. So do I advocate going long? Well, you got a CPI coming in 8 hours. You've got multiple Hindenburg omens. I think you be careful right now. Yes, energy looks good. If you look at some of the energy services stocks, let's take a quick look at those. Um, and if I pull up, let's just look at XLE into my scanner here, run it very quickly. And then let's see, that's not a very big XLE, is it? Let me see if I got a bigger energy sector. Nope. Look at OIH. It's also pretty small, but there's some stocks in here that I really liked. And I think the one couple that looked really good, NE, Noble Energy, breaking out above trendline resistance with a EMS signal, volume breakout momentum from a squeeze with relative strength, and OBV looking good. RIG was another one. It should be on this list somewhere, I would think, unless it's not in the ETF. So I don't really want to go deep into stocks because I think right now you got to be careful also taking out a trend line here. So be careful out there. And as I started with, heed the Hindi.